Good evening, option traders. This is Sam the Trader Geek with your Wednesday evening, February 5th, 2025 option review video. Hope you had a great Wednesday trading day. And we're looking at what the day looked like today. And we can see that that was a moderately up day. The Q's up about 0.45%, the SPY up 0.4%, the Dow up 0.7, and the small cap growth took the lead today, 1.3% with ARKK, our small cap tech, up 1.09%. Not bad at all, although they were off the best levels of the day. We can see if we take a look at the industries, cannabis was in the lead for the today. Well, that's kind of a surprise, but still down 21% over the last 50 days. But it has been positive, 11.3% over the past trading week. We can see weakness in China stocks or China tech stocks, with gold miners up 2.5% as gold makes another all-time high, getting a bit stretched up there and due for some type of a pullback. Time will tell whether we got a blow off top this morning or not, but seems like the gold is holding on to its strength in the futures market. It's only down about $4 overnight. Transport's down 1%. Consumer discretionary down 1.1%. And that includes the results of Disney being down on the day after earnings. Semiconductors up 2.3%, which was good for the tech sector, and also, of course, NVIDIA was leading the way, even though AMD really stunk up the joint today. Solar down 1%. So we can see on a 5-day basis what's leading the way, and transport's leading the way on the downside, with gold miners and cannabis up the most. And then on a 20-day basis, that's basically a trading month, you can see that cannabis is down 4.4%, semiconductors 5%, and solar 5.6%. And defense and aerospace up 8.5%, leisure and entertainment and cybersecurity up 7%. But really, nothing comes close to the gold miners, up 18.7%. And China stocks are up to 9.7%, including our two plays in China, the FXI puts and the BABA play. And on a 50-day basis, gold miners still up there, but not as good as internet stocks or cybersecurity stocks and leisure and entertainment, with the worst being cannabis and oil and gas, energy, and home builders being down the worst. So I don't think we have the updated numbers. No, we don't have the updated numbers for the National Association of Active Investment Managers, but those are coming. So let's take a look at a couple of charts. And here's the SPX on the daily. And we can see that we had a gap down on Friday, and or I should say on Monday, and then we have 3 days recovery. So looking a little bit better above the 8 EMA, this orange line, and trying to recover, and we'll see if we get back to all-time highs. You can see the MACD was coming in for a cross and said, no, thank you, I'm going to stay uptrending. RSI is a middling 55, not too bad. We take a look at the NDX. We can see that same kind of picture, although a little bit stronger, it looks like, with the candles here, and above the 50-day. And same kind of story with the MACD, looking like it was going to cross down, said, oh, no thanks, and showing some renewed strength. But we still have a lot of ways to go to get this back in the up mode, rather than 3 days up, 3 days down, and what have you, with all the tariff news coming. Another middling 55 on the RSI. The Russell 2000 looks pretty much the same for the last 3 days. Nice to see it participating in the upside, just coming up to the 50-day here and closing slightly above it. That's a good sign. MACD is positive, barely over the zero line, and again, middling relative strength on the RUT. If we take a look at the SPX expected move. You can see that into Friday the 7th. We still have about a 57-point move into Friday. Tomorrow we have a 34-point move. And that 57-point move is basically of the 103 we had for the full week. And as you know, we have non-farm payrolls on Friday before the market opens. So that should be fun for some volatility. Next thing I'd like to look at is the VIX. And if we take a look at the VIX chart, consistent or inverse with the market, 3 days up on the market, 3 days down on the VIX. We closed at 1577. And this is a close below the 50-day for the VIX. And we had a cross up last week, and now it looks looking like we're going to cross down. RSI below the 50 mark, so not yet ever sold. So that's a positive for the market. If we say 15.77 for the VIX, we'll call it 16. And we like to go out $1 out of the money and price out the puts and the calls that are $1 out of the money. So we can see that the 17 calls are priced in about 206. And if we go out to the 15 puts, they're pricing out at about 44 cents. So about a 4.5 times premium for calls. And that tells me that still hedging going on. This morning it was at about 2.5. So it looks like the rally had some people doing a bit of hedging. But this isn't a big ratio to really start saying that a pullback is imminent, but it is showing you that the bias is towards some protection. So with that, let's take a look at our trades that we have on, and I'm going to bring up the active trade list. And we'll start it out with Amazon, which has earnings tomorrow. So probably going to take the rest of this off ahead of earnings. And we can see that today we have had a bit of a pullback. I think some people are getting ready for earnings about a day early, and we closed right at the 8 EMA. We have taken 5 profit targets on this one. The most recent one was on the 28th of January, and we've been waiting to get to about a 15 level. This is a $20 wide call spread. So it's been a nice play for us. It's unfortunate that after a 52-week high, or I think this is an all-time high, we got such a big pullback, so to speak, ahead of earnings. But that might bode well to kind of take a little air out of the tires. But if you don't have to wait for me to signal tomorrow to close this, because we definitely don't want to go into earnings with something that's this rich and so close to expiration. And while a spread will be less affected than the call option in terms of decay and collapse of value, it's still, if Amazon goes down, this will definitely lose a lot of value. We don't want to do that. So my goal, and if you're listening to this, you want to close this tomorrow before earnings. And could the stock scream and make this full value? Sure, but I'd be going into the earnings with a different play, and that would only be if you want a long-term position. Asana is a new play from yesterday, and nice start that we have for it. We're up about 11% on this particular play, showing a little strength. This series of dots is an ATR trailing stop, and I like to use it as a line of demarcation, or at least one of my indicators. And once it closes above there, then it tends to portend nice things for it, and probably had an attack that lasts all-time high. So nice start to this. Our first price target is $3.40. We'll see if we can get our first profit target sometime this week. So Baba, looking really good. We've taken about 5 price targets on here. Today, not so much, down 3%, but still in the range. So we are looking for our next profit target at 1450. We're up a whopping 15.96%. So put that in your calculator and figure it out. In any case, we're finally making money after losing on our first play for Baba, and it's looking good for higher prices. So I think we will see them. We have a nice combo, and the width of actually this is a open call, not a spread. So we've got kind of unlimited upside here, and that's a good thing. BE trying to recover from the whole gap down from the DeepSeek scare. Still not getting over the 50-day, this blue line here. A bit of a topping tail today. It's up $1.15. Still holding on to it, although we've got a lot of time on here, and looking like we're still somewhat profitable on it, and we did take 2 profit targets on it. So we'll let this work. It's a play into May, and hopefully we can get back above the 50-day and then attack this 27.34 level, where there's a parabolic stop and reverse indicator. BTU not looking as good, but having a really good day yesterday, but no follow through. And this is a cold play, and then there's fears of tariffs, of course, on energy, including coal and oil. We did take 1 profit target at the $2 level. We're waiting for our second. We're down 32% on the next set of calls. So at this point, we're just going to wait and see what happens. This is a February call. We don't have a lot of time on it, but we'll be a little patient and hope that we can get more of a recovery. I like coal for 2025. It's one of my themes, and we'll see if BTU can get back in gear. CRM, still looking good, had a nice uptrend and pulled back into the 50-day, bouncing off the 50-day today, and still looking good. Our next price target is 1350, and right now we're pricing out at 977. We paid $4 for this, so we have a nice profit in here, and we have until March, and the earnings will be coming up, but a bit later. CRM or CVX, after the earnings gap down on Friday, a nice recovery, taking back a lot of that move down, and so our put spread is already 42% profitable. We sold it for $1.30, and we are at 75 cents. So that's kind of a nice thing, and kind of a no sweat trade, like to have a lot of those. CZR, another one of our put sales. Let me pull this down. There we go. Don't need to have the order there. Caesar Entertainment. I wonder when earnings is coming up on this one, if we've had earnings so far. All right, it's not showing up there. All right. This is another put sale that we had. Expires March 21st. We're up 41%. It's above the 50-day, not doing anything wrong. And slow and steady is what we like in a put sale. Yet another put sale after gapping down on Monday, where we've recovered pretty much. I was looking kind of dicey on Monday, actually. I was like, what the heck's going on? This thing has not pulled back at all. And all of a sudden we had a big gap down on Monday. But we're up 57%. This is a February put, expires in 16 days. And I imagine that this one, given where we recovered from, will have no problem keeping most of the premium. FXI, I almost on Monday put on a call spread, and it would have been good. But here we are back in the soup, just gapping up and gapping down. You can see this thing gaps all over the place. Of course, China trades overnight, and that's what you're going to get with an instrument like this. But on this put that we've rolled twice now, we are up 20%. This is a March 30th put. So slow and steady on this one. I'd love to put a call spread on here, but I just need to see some more consistency. GDX, we took another profit target on this today, recovering nicely. Maybe it's on the warpath to get back to this 44.22 high, although it is a bit extended. You can see the MACD looks solidly positive. Nothing wrong with this. We got into overbought territory here. We're above the 70 level. We haven't hit the 80s. Over here, we hit about 77 before pulling back, but looking good. We took another profit target today, and our next profit target looks to be about 250 on GDX. GRAB, quite a disappointment after this gap up yesterday and holding the 50-day and really down 10% after a big up day yesterday. So it was starting to look good, but I don't know what happened today for it to gap down. You can almost call this an island reversal, but this better get in gear soon, because if it doesn't, we're just gonna have to bid this goodbye. This is a cheap speculative call that we bought on this. We have until April 17th, so plenty of time, no question about it. But this kind of action is really concerning and disappointing, to be back right under the 50-day after one day of closing above it. This is, I think, what sometimes trader Larry Williams calls the specialist trap, where they gap something up, they rally it during the day to suck everybody in, and then the next day they sell it. Could be that, could be something else. But I mean, look at the volume here and the volume here. So it could be just someone taking advantage of the liquidity and selling out. And I gotta tell you, I'm not a big fan of trading sub $10 stocks, let alone sub $5 stocks, but this one's more of a speculation than anything, and that's why I went with a call rather than something else. Intel keeps finding support at the 19 level, although the MACD is negative, and we are not quite in oversold territory, but this thing needs to get moving for us. We are down on our play. And we have rolled out to March. I'm gonna have to check why this still says February, but in any case, Intel testing our patience. We move this out to March, and we'll see if this can start getting moving. The nice part about it is, again, it's holding the 19 level, and hopefully Intel starts rewarding us. Now, J&J, on the other hand, finally recovering for us and closing above the 200-day today for the first time in a while, since it broke down right up here back in November. So that's a positive sign, and healthcare is starting to recover. Look at that MACD, it's solidly positive, and we're not even overbought yet. So we've got yet to get to the 70, let alone 80 level on the overbought indication. So J&J looking pretty good. We've got our next profit target at 625, and we're not too far from there. We could get there tomorrow, hopefully, and liking J&J more and more. Now, Microsoft, after the earnings gap down, has gone sideways, which is what we want to see in a put sale. We sold the 395, 375 put sale in February. We are up 23% on it. So it's holding the 410 level. So it's far from our short strike. And I'll admit that we have quite a bit of time here, but we also collected $2 on this. I like the bigger credit collection, even though it means taking more time for this trade to pan out. Netflix, my only regret with this is that I went with too narrow a spread, and we are already at the past the upper end of the spread, and I guess I got bogged down in trying to keep the price and outlay of premium in a choppy environment under $10. That was my mistake. Hopefully, some of you uh, either bought a call or did something wider than this, but we're already taking one profit target on here, and we're waiting for our next one, but plenty of time. Goes out to March. May have to close it out and reestablish a position. I think this thing could easily get to $1,100, $1,200. There is no resistance here. The sky's the limit on this if they want to keep squeezing the shorts and moving it up. And I think having a wider position in here might be wise. And I'll look to do something perhaps on an up day. So MACD obviously solidly positive, and we're already in the overbought territory. NVIDIA, we have a couple of plays on here. Having a nice day today, up 5%. So really nice for NVIDIA. And our first play is a straight put sale that we did late last week, 190 bull put spread. And we're already up 69%. Actually, we're up more than that, because this is pricing out at about 16 or 17 cents, and the pricing here seems to be a little bit higher than actual prices. But in any case, this is working out for us. It's the February short put spread, and with the recovery over the last few days, rewarding us with some nice prices. And you can feel free, if the value of the spread is too far out of the money and you are still bullish on it, you should feel free to maybe move it up to say a 110, 100 put spread on your own. There's no need to follow along with Sam. I put out a trades and I'm putting it out for 400 and something members. So you want to be able to do your own thing and kind of make the trade your own. The other side of this, of course, is our covered call. And we've rolled this a few times. We started this out in December. We rolled out to January, February, and now March. And so we actually, you can see here, if I open up the legs of this, we opened this way back in December, and we paid $147 for the stock, but we collected $12 for selling the call, and we closed that for 72 cents. And then we sold the January call for $5.40 and closed that for 40 cents. So that's $5 collected there. That's $11. That's $16 we've collected. And here we've collected another $4.30. So call that $20 we've collected. And with NVIDIA at 119, the credit collection and close premium worth about $20 so far helps mitigate the pain of the stock being down $27 from our original entry. So most recently this week, we rolled this the 140 call out to March, and we paid $4. We collected $4.50 here. And my thinking is, if NVIDIA gets back to 140, which is where our short strike is, then we will be nicely profitable on this relatively low risk trade, especially considering that we have not broken down below the 110 level. So again, you should feel free to take that short strike or that short call that you have. And if you feel like you want it out to April, or you want it closer into the 135s, to roll it up on an up day and collect additional premium. Obviously, you don't want to sell a too close in the money call, because you'll just kind of force a loss on the trade, or at least lock in a loss if you do that, say selling the 130 or the 135s, given that we paid 147 for the stock. So experiment with different things. Silver still rallying, a bit of a topping tail here. MACD solidly positive, still not overbought. This is our role play. We have the at this point the March 24 put, and so we're up 111% overall on this trade, but on the current one about 64%. So we are looking to close this for about 5 cents. It's a little confusing here, I understand, once we have multiple legs closed. So actually we have the 26 put sold now in April, and that one's up 56%. We sold or harvested, closed this one for about a 73% profit. So nice collection on the silver as it kind of goes back and forth. TLT closing above the 50-day, having a nice day today, and we took our next profit target. We have 2 plays on TLT, so we're inching towards that 90 level. We are going to run into resistance. We are above the 50-day, but really up here at 92.70 at the 200 days, where we'll probably run into even more tougher resistance. You can see MACD is solidly positive. I think we have more gas in the tank here, but we might take a rest, and RSI is only at 62, so we're not at risk of being terribly overbought. We have the March 85.90 call spread, and we are almost at full value, so to speak, at least for the width of the spreads. And once we get to about 450, that's basically about 90% of the width of the spread, of the $5 spread. And we'll probably substitute out something else, because once we get above 450, we're not likely to get close to $5, even if TLT is above the 90 level, at least not until the week of expiration. On the other hand, we have the March 82 put sold, and we sold that for about 75 cents, and it's at about 21 cents now, so we're up about 72%. Nothing to worry about there. Now Tesla, I'm kind of regretting when this was a little bit behaving a little bit better, that after we hit the 24 level, that I didn't close this out. But we have a lot of time until March. But Tesla is showing weakness along with others of the Magnificent Seven, and you can see that today, even on an up day, was still down 4%. I believe that was on delivery numbers. In any case, we are at $20 for this spread, and we have taken several profit targets, but we need to get back above this 50-day. We'll have to close the rest of it out. MACD solidly positive and starting to meander under the 0 line, which is not great, but we are starting to get a bit oversold at the 42 level. Oversold is really in the 30s here, but I'm going to keep an eye on this one. I still think that Tesla can come back for us, given that we have a lot of time, and we harvested several layers of premium or levels of profits. Finally, URA. This one is living under the 50-day and under the 200-day. Again, after the DeepSeek news, where we had that big gap down 2 Mondays ago, this has not recovered, and we have yet to take any profit targets on it. But we have until April on this call. We're down 30%, and the first price target is 3.25. We paid $2.15 for it, so we're looking for a 50% profit on our first profit target, but we may decide to take profits at 25%. So MACD is still positive, and we're just looking for strength to return. We've seen strength return in some of the nuclear names, like Constellation Energy and I believe it's Oklo. So we'll see if uranium, the uranium ETF can resume and get back up there for us. But again, we have until April, and this is plenty of time for that. In any case, hope you found this video helpful. Ran a little bit longer than I had expected. And if you have any questions for me, Sam the Trader Geek in the forum. Otherwise, at Trader Geek on Twitter, give me a follow if you're out there on Twitter. I would appreciate it. And I'll see you tomorrow, Thursday, in the forum, ready and raring to go. Take care and have a good night, everybody. Bye-bye.